This is not just a random, or this is not just a normal SMC lesson on how to take entry in SMC. This is a weekly market insight that will change the way you look at entries completely. In this lesson, I am going to break down what I expect on GDP JPY and Euro USD. If there's more time, we could look at odd USD and GDP USD as well. What I'm expecting these things to do in the upcoming week. But we are not starting from the lower time frame. I'm going to show you how to practice a top-down analysis, which I call a multi-time frame analysis, so you understand the directional bias first, because without bias, every SMC setup is just gambling. I will walk you through my DSY analysis. I will show you how I use dollar index, which is DSY, to predict the long-term direction of USD pairs, something most traders ignore, yet institution pays close attention to it. We will look at the Japanese yen, which is the JPY, so you will understand what is driving GJ, which is GDP JPY, from the macro side, not just guesswork. From there, I will show you how I refine that higher time frame bias down to lower time frame to spot the right smart money concept, which is SMC. Not every setup we will see on the chart we will take. We just have to concentrate on the smart money concept setup. You will see how I patiently wait for price to return to my point of interest, and the two entry models, or the two confirmation entry models I personally use, or we're going to be using in the upcoming week. Okay, so we don't have to rush. No impulsive entries, no forcing trade. By the end of this lesson, you won't just understand entries, you will have a clear weekly zones, and also a solid idea of where I am looking for buys or sells in the upcoming week. So if you want to stop chasing the market, stop entering too early, and start trading with structure, patience, and confirmation, make sure you watch this lesson to the end. But before we go to the chart, try and like this lesson. Drop a comment if you trade SMC, or if you wishes to understand how SMC work. Share it with someone who needs direction, who need to understand how directional bias work. Subscribe to the channel, and don't forget to turn on the notification bell so you will never miss the weekly insight like this. Now let's get into the analysis. So let's break down Euro USD and GDP JPY to actually spot a level where we can buy or sell. So what you are seeing on the screen now is dollar index. The reason why I'm starting with dollar index is because this is number one thing that move all those USD quote pairs and USD base pairs. Now what I mean by USD quote pairs are actually those pairs that end with USD, which I mean Euro USD, odd USD, GDP USD, NZD USD. The moment you are seeing opportunity to buy, let's say the moment you have done the analysis on this DSY, it's not tradable. You cannot place the order on your MT5, but you use it as a leading indicator. You use this thing as a leading indicator, meaning that if this thing tells you, I want to buy, that I've given you change of character, meaning I want to buy. That means that you see Euro USD, you see GDP USD, odd USD, NZD USD, they are going to sell. You see those ones that start with USD, USD CAD, USD JPY, they are going to buy. Are you getting me now? So that is one thing you need to know about this DSY. We call it dollar index. You're supposed to use it as a leading indicator for those your USD pairs. But in this case, do you know that the moment you have seen a zone here on DSY, you can easily go to Euro USD and see that the same zone. In fact, the same candle, the same thing. If there are three candles you marked as that zone, if you go to Euro USD now, you are going to see that three the same candles. I will show you how it is. In fact, the same candles here you see on DSY is still the same candles you are going to see on Euro USD. The same structure you see here on DSY is still the same thing you are going to meet on Euro USD. This thing, as in, you can easily go to Euro USD now and see the same, as in they are all the same. Are you getting me now? Just let me show you something. Let's try and clear the chart and start from monthly time frame. Let's squeeze the chart. You can see that this market here is an uptrend market, right? The market here on DSY is currently in an uptrend market, meaning this market has been buying, right? You can see price is currently what? In an uptrend market. Now let's go to to Euro USD. You are going to see that the market there will be in a downtrend market. Let's go to Euro USD. Now this is Euro USD. This is Euro USD. You can see the same thing, the same structure, the same what? The same structure. But one thing you need to know about DSY and Euro USD is that they have 99% correlation. It's not like GDP USD. GDP USD is even sometimes stubborn. But you see this one, if DSY make a move, just print one candle, you are going to see that the same candle on Euro USD. If it closes at hammer candle, you are definitely seeing that candle close as hammer candle on Euro USD. So this is like a tip for you to keep using in your analysis. Okay, so let's quickly break it down then to see whether we can see a buy or for a sell on DSY. Then we will now go to Euro USD to look for that the same zone and to take our necessary action. So as you can see here on a monthly time frame, price has been bullish. And one thing I want to remind you guys here on a monthly time frame is that you don't say that this level is an inducement level, this level is liquidity area. Don't try it to. These things here are very massive. The structures here took time for the market to form. Some of the structures here, before you will see a break of structure here, it took months, it took years before a break of structure was formed here. So respect that very particular time that price had to take before it took out a high or before it formed a particular level. Then scrap anything that calls BOS or scrap anything you call liquidity here. What we will look at, what we will always look at for here is key zone. We call it what? Key zone. We're going to be using our Fibonacci retracement to spot key levels. So what are these key levels? We'll start from 50%, 61%, and what? And 78%. These are key levels in the market where we need to pay very attention to. Okay, so as you can see on the screen now, we have to start marking our key levels. But before marking your key levels, you need to spot the last your trading range. I can call it your trading range. You can spot the last high or the last low, all depend on the trend of the market, which you can see on a particular one. The market is currently on an uptrend market, so meaning that if there's anything we're supposed to be looking out for, we're supposed to be looking out for a way to buy, isn't it? Yes, because price overall on DSY is in an uptrend market, so we're supposed to be looking for a way to buy. Now when I decide to expand this thing, you will see that if you want to bring in your market structure knowledge, what you have learned so far on market structure, you will see that price just took out a particular high here, isn't it? Price just took out a particular high here. Simply means that this thing looks like a break of structure, right? It does not mean that it looks like a break of structure. This is actually a break of structure. In fact, before the market took out this high, it started the move from May 2021, 3rd of May 2021, and it broke this high on the 1st of June 2022. Do you know that this is more than a year and a month? This thing started a move on May 2021, May, on the 3rd of May 2021. Then it took him a year and a month before it took out a high. So it means that on this particular level, you don't trade on this level. You don't look out for a zone to buy, because if you mark a zone to buy here, you are going to wait for God knows when it is going to come back to that zone. The only thing you look out for here are key levels. A key level that you know that when this market gets to that level, there's a higher tendency is going to reverse price for a long period of time. So we have seen that price has taken out this high. The next thing is to identify the lowest point where the move started and the highest point where the move also ended, which you can see this is the lowest point of it here. This is the lowest point from here. You can see this is the lowest point. This is where it started, and also look at where the highest point also ended. You can see the highest point ended here. So this simply means that this is our trading range. This is what our trading range. This is our trading range. It simply means that if price breaks the low of this trading range, it tells us that the overall trend has shifted in structure, and we're going to be expecting a long-term sell. If price breaks above it, it also tells you that the long-term buy continues, and that is what you need to know. Okay, and which we know that you're going to take a long period of time, but we're just keeping it here just to be able to follow our rules. Now the next thing we have to do is to plot our Fibonacci retracement to identify where the current price of the market, look at where the current price of the market is. These particular candles you are seeing here, these are where the current price of the market is. As you can see, we are currently in February, right? It's currently here in February as well. So it means that we have to plot our fib to know whether the market is currently at discount levels where we're going to take it very serious. Now, if I plot my fib from this lowest point and drag it up to this highest point, we can now see that price is currently at a discount level. Let me remove this trend line, okay, because I'm not even a trend line trader. So as you can see, price is currently at a discount level. And what is this discount level? Price is at 61% Fibonacci retracement tool. You see that reason why I said you should not scrap 50%. Don't take out 50% when you are looking at for key levels on monthly time frame. You can see how long price stayed at 50%. Look at it. Do you know that when price came back at 50%, it came back at 50% on the 3rd of January. It came back at 50% on 3rd of January. And before it broke that 50%, it broke it on 1st of April 2025. It came back on 3rd of January 2023 and it stayed there till 1st of April 2025. That was when it broke that 50%. Just calculate the years. So respect these levels here. From 50% to 61% to 78%. Take them very serious. Okay. So as you can see, price is currently here on a 61%, a very key level. Then even if you ask it, let me remove this fib and show you something. On the way we normally trade on 4 hour, 30 minutes and the rest of them, the moment we see a break of structure like this, we wait for retracement, then we go in for a buy. I believe that is what we normally do. We wait for retracement, we go in for a buy, right? And then we have now seen that price is currently at a key level. So meaning that all these things can actually serve as a retracement for the market to keep what? Going up. Okay. So then we have to now look into this 61% to see whether we can see anything that have a similar thing we normally look out for on a 4 hour time frame or all those 30 minutes time frame. So what is these similar things we SMC traders normally look out for? I believe we normally look out for a particular zone that is not mitigated, that has not been touched, number one, because we look forward to going at fresh levels. Then we also look out for what they call it, fair value gap, and also inducement, and then break of structures, right? That is what we normally look out for on those time frames. Let's look at these 61% to see whether we can spot those things. So now we zoom into the 61%. I believe you can see this candle here. Look at this candle that is currently inside the 61%. Now let me mark this candle. You're going to see that this candle have all the properties we always look out for whenever we are marking a zone on 4 hour time frame, whenever we are marking a zone on a 30 minutes watch time frame. On all those time frame you normally look out for. As long as you're an SMC trader, I know you look out for a fair value gap, I know you look out for liquidity, I know you look out for a break of structure, which you can see we have a fair value gap here. Look at a fair value gap just inside here on a monthly time frame, and you can see a proper break of structure. This market that have stayed in 50% can actually be called an inducement area for you, and you can see that price now has tapped into the level. So how do we approach price that is already at a particular level? I believe that what we normally do when price is already at that level is to look out for chop. Remember, whenever you mark a zone on a 4 hour time frame and that zone looks too big, it looks too wide, and you don't want to enter with pending order, or maybe you are not the type that love entering with pending order, what you always look out for is whenever price comes to my zone, I go down to 30 minutes time frame, I go down to 5 minutes time frame to look out for change of character, or to look out for a particular entry model, maybe a particular candle formation before you press the buy or sell. Maybe this could be your pattern of entry, right? And here, so we can see that price is now at that level. We have to bring that particular thing you normally do on that lower time frame at this level. So then I will have to remove this fib, but let me mark where the 61% ended. This is it, where the 61 ended. So whenever the 61 breaks, we will know that it has been taken. So it simply means that, I'll have to take it back again. So this is where the 61% ended. and then lock it, and then remove the fib. So it simply means that the moment price tap into this level, and then we will know that the 61% is over, and now price is at 78%, then we should be looking for a way to buy. Okay, then we can see this level now is called our inducement area here. But we need to remind ourselves that this can also be called a break of structure. Are you getting me now? This can also be called a break of structure, because those guys that actually sold from this level, from this highest point down to this lowest point, are also marking their fib like this. Some of them are also marking their fib this way, like this, and then they are also marking a key level, which is the 50%, and they're also marking the 61% as well. They are looking forward that when the market return back to this level, they will take the necessary action, which you can see I've kept the two levels here, 50 and 61. Okay, 61 and 50 I've already kept. So most of them will be looking forward to take a serious action when the market gets here to keep selling. So you have to keep it, right? So now we have to look at what is happening here. Price is already at this level. We can see we have a high, we can see we have a particular high like this, and we can see we have a low, we have another high, and then price went down and weak out, leave a particular what low, and then we can see these candles trying to go up. Then all we have to do is to mark the last high we spotted here on this particular level. This is the last high. Okay, this is the last high here, and also this is the last low we have seen. Okay, this is it. I know you cannot see this thing very clear, but don't worry, when we go to a weekly time frame, you can see how it looks like. So you can see here on a weekly time frame, see how it looks like. You can see this was the last high we saw on a monthly time frame, and this was the last low we also saw on a monthly time frame. Simply mean that if you actually want to know that this DSY has switched, is now a long-term buy, price need to go above this level and price need to return back, then we'll keep on buying. We know that change of character has happened on a monthly time frame, but you can actually drag this particular level down to here. You can keep it like this. Okay, because this is also a high. So it simply means that if the market ends up taking out a particular high like this, if price takes out this high, we will know that a long-term change of character has happened. But do you know the way it stands now? But sellers are still active in this market. They are still active until a particular high has been taken. That is now when we will know that the change of character has happened. We should not take out the fact that the market is still selling and is still selling up to this level, which we can see we have a proper break of structure like this. We have a break of structure here on a weekly time frame. Though the break of structure is not valid, it happened with a week, and then which we know that the sellers are still much more active until this high will be taken. Now you can see where price is. Look at where price is. Price is currently at this fair value gap here on a weekly time frame. Price is currently at this fair value gap here on a weekly time frame. Do you know what price normally does whenever it gets to a fair value gap? I know that price always decline whenever it gets to a fair value gap. Look at, you can see the fair value gap, right? You can see the fair value gap. Okay, so what we are going to do now is to plot our fib from this highest point down to this lowest point like this. Okay, so once we do that, we can see that the half of that fair value gap is also a 61%. The half of that fair value gap is also a 61%. Is also what? A 61%. And remember what I told you guys, that price need to take out this high. Price need to take out this high before we know that this level now has mean that particular thing that he wants to buy. If price did not take out this level, any buy you are looking for should be a short-term buy. Should be a short-term buy. Although I know that when we go down to daily time frame, we'll start seeing a new highs and lows inside this candle and this candle, and then this could prompt us to be buying. But if price fails to take out this high, there's no way that you can see that this overall trend has shifted in structure, though we know that it is at key level. Okay, so now let's quickly go down to daily time frame. Then on a daily time frame, we have seen that price is currently at a 61%, which is a discount level, which what I'm expecting to see, or what I'm expecting these sellers to do, is to take price down, and then they should not take out this low. Price should not take out this low. Instead, price should go up. Are you getting me now? Instead, what? Price should go up. That means that I'm expecting almost the market to sell from this level. Like I'm expecting the market to sell as long as this market is currently at this trading range. As long as this market is currently at this trading range, I'm expecting this market to sell. Even if this week starts and the market go up a little bit like this, price is still at discount levels. But once this market drops down to this level, fails to take out this low, then I will start aiming to buy. Are you getting me now? So like more thing, like the main thing I'm even expecting to see on this particular week we are entering, I'm expecting DSY to drop. Meaning that as I'm expecting DSY to drop from this particular 61 or 78, it simply means that I will be looking forward to buy Euro USD. I'll be looking forward to buy Euro USD in this particular new week. So let's go down to daily time frame so that you can see these things very well. Here on a daily time frame. Here on a daily time frame. So as you can see here on a daily time frame, you can see where the structure is. This is the half of the fair value gap which we marked on a weekly time frame, and the price is currently at the 50% of that fair value gap, which is also a 61% of the particular leg of the particular high down to the particular low. And as it stands, we are just looking for a way to buy for a long period of time, but we need to see change of character first. If we do not see change of character, it does not make sense. But what we are expecting is the market to drop, to sell. So meaning we are expecting this week for the market to sell all the way down to this level before we keep buying. Here you can see here on a daily time frame that we have a particular candle that seems to have all those confluence we normally look out for on 4 hour and 30 minutes. And what are those confluence? We can see that this candle has a fair value gap. You can see the candle here. Let me try and mark it with this color. So you can see that candle here. So you can see that candle here. Look at that candle. Look at that candle. After this candle here, after this particular red candle, this was the last time sellers attempted to sell. And you can see that candle, you can see the zone, you can see a fair value gap, right? I believe that when we scroll down or when we switch down to 4 hour time frame, we're definitely going to see a high. We're going to see a high. Okay, so what we are still expecting, as I told you guys, I'm expecting this market to at least sell all the way down to this level. Then if price respect this level, then we will know that there is a long-term buy coming up. That means we will start buying, maybe when price gets to a discount level and start dropping again like this. We know that it's normal, but if price respect again, we'll keep buying. The moment price takes out this last weekly high, then we'll know that these sellers are over, like they are no longer in this market, but now buyers are now active in the market. You can see how I'm pairing all these things. And do you know that the moment we take action or the moment we wait for the market to return down to this level, then we'll start buying? It simply means that we are following the monthly time frame bias. Okay, it simply means that what? That we are following the monthly time frame bias. But if you check on daily time frame, price is bearish. So but when we take a sell from this level, it simply means that you are following the daily time frame bias. Okay, so it simply means that you are following the daily time frame bias. Take note of that. When you take a buy from this level, it means that we are following what we see on a monthly time frame, because we know that this zone is a key level, and this is a zone is 61% on a monthly time frame, and this particular level is the 61% of this leg of this high and to this particular low, which this particular high down to this low is currently a daily time frame bias, because you can see on the daily time frame price is bearish. So once you are trying to sell from this level down to this POI, it simply means you are following the daily time frame bias. So which one should we follow? Now we also have to understand that which one should we follow between monthly and daily time frame. Which one is more stronger? I believe it's monthly time frame, right? But just imagine that you were able to sell all the way down to this level. Do you know how many pips that thing could be? Just imagine that you went to Euro USD now, you were able to buy from maybe particular, maybe from that level it is up to a very highest point. Do you know the kind of thing it is? Now I have made it very simple for you. What we are going to be doing when the new week starts, even if the market let it just go up like this, even if the market it breaks the trend line, keep coming up, no problem. That means we'll see a further sell on Euro USD. But as long as price is respecting this particular level, as long as price has not taken out this particular high and gives us any change of character and start dropping like this, then on Euro USD, we will start buying. Are you getting me now? We will start buying. Let's say the market open and fails to tap into, like, let's say that the market open and then tap into this particular level like this and start dropping. That means on Euro USD, we will start looking for a way to buy. As in, we will keep buying until the moment price tests this level on DSY. Short that buy, just calm down, don't buy again. The moment that price even tap into this fair value gap and this very particular, because price might even want to react at the fair value gap. Fair value gaps here are even massive, because currently now we are selling from a fair value gap, which is also a 61% as well. So the moment price respects it and drops all the way down to the fair value gap or to this zone, then we have to stop that very particular buy, and then we'll start looking for a way to start looking for a way to start buying DSY. Then on Euro USD, we start looking for a way to sell. Are you seeing how this bias is very simple? On Euro USD, as the week starts, we are looking forward for a way to buy. Then on DSY, we are looking for a way to sell. The moment price tests this level, we will stop buying. Then we'll start looking for a way to sell on Euro USD. So let's quickly go down to 4-hour time. All right, so you can see the 4-hour time frame now. You can see the 4-hour time frame. I can see how the structure looks like on a 4-hour time frame. You can equally see that we already have a change of character here on a 4-hour time frame. You can see we have a change of character, but you and I knows that that any buy you are attempting to buy at a particular level is not meant to be a long-term buy because of where price is. Are you getting me now? Because we already know that before we know that these buyers are very, very mean is when this particular last weekly high is taken. If it is not taken, these buyers here are not really serious for me. So now what is going to happen is that we are not going to refine this POY we marked here. Now, what I mean by refine, or we're going to adjust it, is because we are going to concentrate on all those confluence we normally look at for when we mark POY. What are these confluence? We look at for fair value gap. We look at for unmitigated levels before we mark those zone and inducement as well. So if you check now, if you look at all these things now, if you look at everything that happened around here, we marked on a daily time frame. Is there anything that has a fair value gap here? No. If I remove this thing a little bit now, if I remove this thing now, let me remove it. Okay, you will see that price made a new high, price made a new low. Let me use this thing and you can see price made a new high, price made a new low, price made another new lower high, then price made another. As of here, price is consolidating. Then from here, price went up and weak out this previous high. The next thing, price retraced again, and then price made a new move. It was from this candle. Let me remove this thing now. Focus on this candle I'm about to point now. It was from this candle you are seeing here. So from this candle you are seeing here that the market got momentum to take out this particular word, to take out this internal high first. You can see there was a particular internal high that was taken here. This was the early change of character that was even spotted before price now came as far as this, and then after all this consolidation, price went up and took out this high. This is now a break of structure. For those of you that have been struggling to spot SMC setup, this is now a valid break of structure because this is a full body candle close above it. Now, the next thing you have to do is no longer to mark all these levels. Marking all these levels does not make sense again. If you're marking all these levels, it simply means that, this is the way it looks like before now. And if you're keeping this thing like this, it's nonsense. You might even miss out. Are you getting? You might even miss out on this move. The next thing you have to do is to adjust it to the levels that have that fair value gap, that inducement level, and that proper break of structure, which is this candle I am seeing here. Look at this candle now. This candle that is here has the fair value gap on a 4-hour time frame. You can see the fair value gap here. Can you see the fair value gap? Can you see the unmitigated level? This is the unmitigated level. This was the first time that price took out a high, and when price took out that high, it tried to come down. Buyers said no, and buyers took it up to make it a proper break of structure. If you and I was actually looking at DSY or DSY was tradable, you would have been marking here as inducement level. You would have been marking this thing now as an inducement level. And that time now that this thing is coming down, let me keep this thing well. So, and even the time that this thing is coming back, you'll be very happy that price is already returning back to this level. But price came and respected the inducement level and kept pushing up. Something like this normally happen. Okay, so all we have to do is to extend this level. When we extend it like this, then we are now patiently waiting for price to return back to this level. Are you getting me now? For price to return back to this level, tap into this level for us to start looking for a confirmation to go in for a long-term buy. You know, this is a 4-hour time frame now. So if you are the type that normally look out for confirmation, you should just wait for it. If you love using pending order, you should also take it. I will show you where this order is on. I will show you where this particular zone is on Euro USD shortly now. And again, there's something I want to remind you guys. The fact that you refine this zone now does not mean that if price, let me keep this in like this first, does not mean that, let's say the week started, you know, this price is very crazy, this market is very crazy, they knows what we want to do, they knows how to liquidate us, how to manipulate us. Maybe during the new week, price may decide to test this trend line very well, might decide to test this 61 very well, or might decide to tap into the fair value gap very well before dropping all the way down to this level. The next thing, price will respect it a little bit, go up, then decide to weak you out, then start going up again. Don't say that this level has failed though. It's a lie, because we know that everything around this level is the daily time frame POI. Is the what? Is the daily time frame POI. Every single thing around here is the daily time frame POI. But we just adjusted it so that our stop loss will not be too wide. That was what I just did. Okay, so take note of that. So now let's proceed to Euro. So what is my bias now on DSY? Very simple. I'm expecting the new week for DSY to sell. In fact, if DSY like, it can keep pushing up. It can keep pushing up. But as long as DSY has not taken out this high, as long as it's still somewhere around this level, I'm expecting to drop. And when DSY start dropping, then there's a higher tendency that I am going to keep buying Euro USD in the upcoming week. You know that once we are looking forward for DSY to drop, it simply means that we are following the daily bias. Very simple. It simply means what? We are following the daily bias. But once we are looking for DSY to buy, it simply means we are following the weekly time frame bias. So we have two things to do here. Wait for price to return down to this level, then we take a buy. But as we are waiting, we should also look for a way to get in at a particular level. Let's say we had a change of character like this, and then we keep selling all the way down to this level. If we see any change of character, let's further break down this thing. Let's further break down what is happening here on a 30 minutes time frame, because it looks like price has already given a change of character, but you know that price has not tapped that 61, but price has already tapped into the fair value gap. So is this thing a change of character? Is this thing a change of character on a 4-hour time frame? Let me show you guys. Is this a change of character on a 4-hour time frame? Then it looks like a change of character, but this change of character here is not really that strong for me. And then we can see that we already have a zone here. You can see we already have a zone around this level on a 4-hour time frame. This is a zone that has the fair value gap, and you can see it's the last candle that led to this break of so there's no need for me to mark this one. But when you switch down to 2-hour time frame, you can see that this thing is trying to play with our emotion. There's another candle that has all those confluence here. The moment we decide to refine, we have this candle here as well. We have this candle. Are you getting me now? We have this candle. Okay, we have this particular zone here. If I decide to switch down to 1-hour time frame as well, and then you guys can remember very earlier I said where this price is at DSY is a level where we're supposed to be looking for sales, not buy. Is a zone where we're supposed to be looking for what? Sales, not what? Buy. So this is how it looks like on a 30 minutes time frame. This was the one we marked on a 4-hour time frame, which I have refined like this, and we can see we have another one here. This one we have on a 1-hour time frame does not have all the confluences we normally look at for, which you can see it doesn't, or unless I keep it this way, unless I kept it like this, which I can see that last candle around this level. You can see, I can see that last candle here. Now here is my advice. You can see we have two levels here. You can see we have two levels, right? Look at the two levels. We have normally this level is going to serve as an inducement level. This level is supposed to serve as an inducement level, which you can see is supposed to serve as an inducement level like this, and then we'll start looking forward to take a sell from this level. But here is something I want to tell you guys as we go into the new week. If you are still doubting whether whether DSY will drop from this level, just allow DSY to come up. Maybe on Monday, allow it to come up. Maybe if it does respect this inducement level and start dropping, this inducement level is a 4-hour time frame POY. We are not even seeing any of this thing on a 4-hour time frame. We just came down 30 minutes time frame and we realize that something is here. And whenever there is something that is above here, that's sometimes we'll see that the price might come and weak out that 4-hour time frame POY. Tap into this level. You may be thinking, why did price weak out that level? It simply means because there was a particular setup here. Are you getting me now? So once price has already tapped into this particular level, all you have to do on a Monday morning is calm down. Just leave it. Because why I said you should leave it, why I said you should not just go in on that Monday morning is because, look, if price is going to respect this fair value gap, we will keep selling until price drop all the way down to this level. All the way down to this level. Look at the level. We will keep selling until price drops all the way down to this level. Just imagine. We will keep selling until price drops all the way down to this level. Do you know how many pips from here down to this level? Just calm down. The moment is Monday. Wait for price to tap into this level. Maybe when price taps into this level like this, to give you additional confirmation that is going to sell and does something that look like this, there's a respect of this level, the next thing price sells and take out this particular low, then you wait for inducement, wait for a full retracement and keep selling. Are you getting me now? Maybe you will enter on this second sell, not on this first sell. You are using this one as a confirmation that this DSY is going to go bearish. You are not entering immediately because there's a higher tendency that this thing we see might be like a fixture. Price might even want to keep dipping in, because number one thing I'm saying that you should wait for price to respect this level is because since price has not tapped into that 61, price is still somewhere around the 50%. Price has not tapped into the trend line of the 61%. It has not tapped there, but it is now very closer to it, and it has already tapped into the fair value gap of this weekly time frame. So all we have to do is to calm down. Once price respect this one sells, we have known that yes, something is about to happen. Then we take the further sell from this level if it actually retrace. But if it did not retrace, just go and rest. Sometimes it's happened like that. We will now wait for price to return down to this level and to go in with a change of character to buy. Are you getting me now? So what I'm expecting for DSY is for price to drop all the way to the downside. Like I'm expecting DSY to sell. So I'm proceeding to Euro USD now to look for a zone to buy. No longer a zone to what? No longer a zone to sell. Simple. I'm going to Euro USD now to look for a zone. To look for a zone to buy, not a zone to sell. Okay, so now let's quickly go to Euro USD. So guys, this is Euro USD. This is Euro USD here on a 30 minutes time frame. So what we said on DSY, we said we are looking forward to buy. We are not looking forward to sell. In this new week, our own are to keep on the buy. We want to keep on buying. That is our bias because of what we have seen on DSY. But until that high and that low has been taken, then we know that these sellers are over. Are you getting me now? So, and we know that when we are looking forward for a way to buy, when we are looking forward for a way to buy from this level, when we are looking forward for a way to sell from this DSY level, we know that we are following the daily time frame bias, because it simply means that price retrace to a discount level to drop. So it simply means that price retrace down to a daily time frame discount level to what? To buy. Are you getting me now? Hope you guys understood. If you did not understood up to this level, try and watch this lesson like 2 to 3 times. You will get it. You understand how top-down analysis, multi-time frame, how to get directional bias, all those things they normally tell you guys. This is how to get it. Are you getting me now? So let's try and clear everything on this chart. Let's clear everything. So is it necessary to go to monthly time frame, weekly time frame? We can't do that. Okay, we can do that. After all, we've seen how we scale down to 30 minutes time frame. We started from monthly all the way down to 30 minutes time frame. So let's still do that on Euro USD very fast. With this one will not take any time because we have already done all the whole mass on what? On DSY. So as you can see here, price is bearish as usual, as we see on DSY, and as we can see, if we try to plot our fib from this highest point down to this lowest point, and then we can see that Euro USD is at 78% Fibonacci retracement to key level. Is at what? At 78% Fibonacci retracement to. Do you know why you are seeing Euro USD at 78% and you are seeing DSY at 60%? Remember what we did on DSY. On monthly time frame, DSY is at 61%. On monthly time frame in Euro USD is at 78%. Now let me tell you a secret that you don't know about this Euro USD and DSY. Euro USD is much more faster than DSY. But do you know that it is DSY that controls that thing? Euro USD is much more faster. You can see a zone on DSY, then you switch to Euro USD, you see that the same zone. But do you know what is going to happen there? Still that the same zone you see on Euro USD, price will come back to that Euro USD zone. It might even weak you out, or it might look like it's coming closer to hit your stop loss. But it has not even touched the DSY own. It has not even touched the DSY, and the moment price now touch that DSY zone, you will now see price. If price keep on dipping, there's a higher tendency that price will tap you out on Euro USD before moving in your direction. But in DSY, it still respect that zone. Are you getting me now? So in Euro USD, price is much more faster. That is why sometimes I always wait for price to tap into DSY before I press that very particular words buy or sell on Euro USD, because this Euro USD is so faster. It's very, you mark it so you see how fast it's going to return back to it, but DSY will be crawling small, and before all this thing is going to buy, DSY need to get to that level. If you are doubting me, monitor how this thing will look like in this week. Follow these things and you will see what I'm telling you. Okay, so now this is where it is on Euro USD at 78%, but it's currently at 61% in DSY. It's still at discount levels. So if we look at what is happening at this discount level, let's bring back what we normally do on a 4-hour time frame by looking out for a particular candle that has all those confluence. We can see we have a particular candle here that has been mitigated. It has a fair value gap. You can see it has a fair value gap like this. Let me show you. Okay, let me use this arrow and show you guys. You can see it has this fair value gap, and you can see price tapping into it. It has a fair value gap. You can see price tapping into that level. Just the same thing we spotted on DSY, and this thing can serve as an inducement level. This can serve as an inducement level. I remember the inducement level that we marked. Okay, so look at how it looks like. So this time around, we have seen the inducement level, we have seen the main level. Now all we are going down to weekly time frame is to refine it, to get our last daily high, to get our trading range. We have already seen the main trading range, which is from this high down to this low, but we know that these are bigger structure, so we have to go more closer to where price is to get our main trading range, which you can see this particular high, this high here, and this particular low, this particular low that is here, it is still this particular candle. I will show you that that candle is a low on weekly time frame. You're going to see that it is a low on a weekly time frame. This is it. Now let me remove this Fibonacci retracement tool. And then you know that these guys that took price up to this highest point, as we explained for those, as we explained for that DSY, that part we marked, that we say that once price get to this level, there's a higher tendency that sellers will still want to take it down. That is the inverse. That is the inverse of it here on Euro USD, which you can see. See this 50% here. 50% is here, and the 61% is somewhere around here. Okay, we know that this one is going to take long period of time before price get to this level. So this is like our trading range here. The moment price breaks above, we know that trend continues. The moment price breaks below, we know that the trend has reversed. It's going to be there. It's not going to be deleted. So here on a weekly time frame, as I told you guys, there's a particular highs and low around that level, which you can see here on a weekly time frame. There was a particular move from here that went up and took out this high with a wick. If you can remember, when I switched down on a weekly time frame, I saw something that looked like this on DSY. Remember, we saw something that looked like this on DSY. You can see that wick. You can see that we have a particular week. You can see that particular week. Look at that candle that spiked below. This is not a valid break of structure. This is just like a liquidity grab, and still the same thing happened there. You know, when I'm telling you guys that this is the same candle, that is one thing about this Euro USD. And don't forget that on DSY, we found out that price is reacting at a fair value gap on a weekly time frame, right? And you can see the same fair value gap here on Euro USD. I didn't understand. Now I'm trying to prove to you that this thing shares the same structure. You can see that on weekly time frame, we saw a fair value gap around this level here on DSY. You can see that fair value gap we marked. Look at that fair value gap here on this color, on this yellow background. You can see the fair value gap, right? And see that the same fair value gap here on DSY. Those two candles, you can see them. You can see the difference that the other one wants to sell, the other one, this one wants to buy. Okay, you can see that this one wants to buy. Now the next thing we have to do now is to what? Is to find out what is going on this fair value gap. First of all, we have to plot our fib to know whether price is at discount level when I take it up to this highest point. All right, so let's keep it very well. So we have seen that price just tapped into the Euro USD 61%. But do you know on DSY price has not tapped into the 61%, right? You can see the 61% price has already tapped into that level. Now let's remove this thing. But on DSY price has not tapped into that. That's why I told you guys that this one is very, very faster. You go mark zone, you will mark zone, and this thing will be so fast enough to get to that zone. But on DSY price will be crawling until price get to that zone before the main things start happening. I've experienced this thing a lot, and I know how many times this thing has made me so emotional. I'll even be begging this thing, stop now, this thing will be pushing up sometimes. So it happens that way. This is me sharing my personal experience with you. Okay, so in that 61%, which we found out to be a weekly time frame fair value gap, price has already tapped into the 61%, and price has already tapped into the fair value gap, the 50% of it, and then we still have to keep it there. Let it just be there while we proceed in terms of marking our points of interest and the rest of them. Even if I want to remove it, you can see we have a little retracement here. Let me try, but this one is not really necessary, but we can actually mark it. Okay, cool. We can see that we have this level here. I will try to reduce this color. Okay, you can see we have this particular candle here, and we have another zone around this level as well. Though this is a daily time frame. This is a daily time frame key level. These are key levels. These are key levels. These are those levels I told you guys. Even if DSY it can even dip in. That's what I told you guys. Even if DSY it can dip into that fair value gap. It can go into maybe it might even buy. I don't care. But as long as this DSY is somewhere around there, and we know that these particular what they call the particular sellers are still in, then we have to be looking for a short-term buy. Okay, so that is it. As you can see, we can keep it like this and then leave our Fibonacci retracement tool on the chart by simply reducing the way the fib looks like. You can keep it this way. This Fibonacci retracement tool plays a very huge role in your analysis. It tells you when these serious guys will step into the market. So let's keep it this way. So let's keep it into this particular way. So you can see. So now this time around we go down to 4-hour time frame. Then on a 4-hour time frame, we can see you can see that level I tried marking on a daily time frame. You can see how wide it is. You can see how wide it is. We just have to keep it this way. Let's keep it like this. We can keep it around this level. But we should know that all these places are the 61%, and then even if price decide to tap into this level, like even if price decide to do something that look like this into this level, we know that price is currently still at 61%. It's until price breaks it before we know that it is over. So this time around we are looking forward for a way to buy. So this is it now. This is how it looks like on 4-hour time frame. So let's see whether we have seen a zone to buy. Remember that on DSY we have already seen something like a change of character, right? On a 4-hour time frame we saw something that looked like a change of character. See it here on Euro USD. This one finished took out this high with a wick, but on DSY it took it out with a full body candle because it's fast enough now. That is why it has done it with a wick. And then you can see here, you can see price took it out with a full body candle, but here on the DSY the inverse is the case, which you have seen. It took it out with a week. And if you check again, we can see that we have, look at that 4-hour candle that I later marked as an inducement level on DSY. You can remember there was a particular 4-hour candle I marked, and then I later went down to DSY to mark it. I later went down to 30 minutes time frame to mark that level as an inducement level. Do you know why? Because I just find out that there was a 30 minutes POI below it, and then here on Euro USD I have seen a liquidity grab. You can see a sweep of liquidity, and then I am going to mark this week and study how this week looks like across other time frame. You see, this week I'm going to mark it like this, and then this week could actually be that 30 minutes time frame week we spotted on this thing on DSY. Okay, don't forget that I told you guys that we should just allow Monday to become a confirmation. Like, we just need to allow price to respect any of those levels I marked. The moment price respect it, then goes up, any little retracement, we'll start what? Selling. Then we'll start buying on Euro USD. See, this is how it looks like on a 2-hour time frame. It still looks like a week. Should I remove the fib so that my chart will not be filled with a lot of lines? So I have to remove the fib. Let me remove the fib. We already know that we are at 61%, right? And look at how this is a sweep of liquidity. For those of you that are struggling in terms of marking A plus setup, this is a sweep of liquidity. This is a break of structure. Not really a valid break of structure, but we know that what controls this thing has already given a valid break of structure. I told you guys that this level is also a key level in 4-hour time frame, which we later marked as an inducement level. But let's study how price looks like on a 1-hour time frame. 1-hour time frame, this zone still doesn't have all those fair value gap inducement level. It still doesn't have it. It still doesn't have those it does not have the fair value gap yet. But we can see how it looks like on a 30 minutes time frame. Even if we love, we can still refine this one down on a 30 minutes time frame like this. And don't forget that I later marked this level as an inducement level. Don't forget, I later marked, I think somewhere around there, as an inducement level. Like, it was like this on DSY. It was like this on DSY, like this. Okay, it was like this on DSY, and this was the particular level I later marked. Okay, so now we can see that this level, it does not. I said it. Now look at what is going on here. See it on 15 minutes time frame. See that on 15 minutes time frame. Look at a full body candle that has all those details we normally look at for. Number one, we can see that we have a little change of character here. You can see we have a little change of character here. So we can see the particular candle that led to that break of structure, it's even swept this particular liquidity. So on Euro USD, it is looking more convincing than DSY, which we can just place our order like this. You can place your order this way. Have your stop loss. We are risking like 15 pips. Then we have to target to the upside. What I did not mark was that daily time frame bullish POY. I said I'm going to mark on DSY, so I'm not going to mark it here. I mean, that daily time frame I said I will mark on Euro USD, I did not mark it here. That one is left for my VIP student as well, so which you can use the link below and join, because we still have a lot to explain. But as you can see here, this is what I have on DSY, and this one look more convincing than the DSY. I mean, this is what I have on Euro USD. It looked more convincing than the DSY. So it's an A plus setup here, though price actually took out this high with a week. But if we are to study it internally, we can see that price actually did it to the full body candle. So this is what I have gotten on Euro USD. Though I said we should allow price to respect this level, then go up. When price goes up, any little retracement, then we can now jump in on a particular buy. Then we know that this level is meant to be respected. But with what I'm seeing here on Euro USD, I think on Monday morning, this will be my first action on Euro. I will take this particular buy. Okay, I will take this buy. The reason why I will take this buy is because I feel price is going to respect it. So on the later part of this lesson, I will break down other pairs as well. Euro, GDP USD or DUSD, to see whether I can see the same setup on those particular pairs, and then we will now go to what they call it GDP JPY as well. Then maybe on that later part of that lesson, I can mark the daily time frame POY that we are expecting Euro USD to switch from the bearish market to switch from the bullish market we have been seeing. It has been buying, right? And from the bullish market to the bearish market, which we expect the DSY to switch from bearish towards to bullish. Hope you guys understood this part. So for now, you can see the level. I hope you have seen it. So we're going to buy from this level, and that is how we insist on keep on buying until this level has been looked. I think where price is a level that we're supposed to be thinking of how to getting on a buy. Even if this level fails, wait for confirmation around this level. Don't be aggressive enough to go in. If this one fails now, wait for confirmation here, then we can go in on more buys. Okay, and this one as well, you can see we still have a zone around this level. So these are every single thing I have on the breakdown between DSY and Euro USD. On the next lesson, which you can just click on my channel, you will see the next lesson talking about all the USD, GDP USD, and NZD USD. I don't know if that one is what you trade, but if that's what you trade, you can watch the lesson to know whether we can have the same setup. Thank you, and may God bless you.